Wonder, is it too late for this SaaS trade as multiples have run up and markets are questioning their valuations, and we do look forward to the vaccines and a reopening eventually?
You bet. Well, great to be back. Thanks for having me on again. And I would say that the cloud stocks have had a fantastic run. Absolutely. The industry is up about 70% in total this year. And the Mount SaaS basket in particular is up over 100%. But this isn't a short-term trend. If you look over the 10-year arc, you'll see that these stocks have massively outperformed over the extended period. And it's because of the fundamental replatforming that's happening in tech and within software specifically. And when you get back to a work-in-place environment and the vaccines roll out, people aren't going to go back to their on-prem systems and their legacy applications. These tectonic shifts are permanent, and we absolutely believe we've got many years ahead of this replatforming wave. And the FANG stocks that enjoyed the twin push of internet and mobile are largely plateauing, where cloud is picking that up as the growth driver for tech.
Right, and Byron, I certainly wouldn't argue that cloud has a long way to run, but just in terms of expectations, Workday last night reported earnings that disappointed investors. This is a prime cloud enterprise play here, and they said that the coronavirus is still going to sort of hit their subscription revenue. So what should investors perhaps be keeping an eye on for some of these names in the shorter term?
Yes, so there will be a separation. There have certainly been COVID beneficiaries, the collaboration stocks in particular, the Zooms, the Slacks, those types, and then there will be COVID laggards serving industries in airline, transportation, hospitality, those sorts of sectors, or the large enterprise installs like Workday, where those are tough replatforming implementations to do during a COVID time or during a slow economic push. So absolutely, the industry will separate and you'll see different stocks react to the different buying cycles. But as a basket, you will see continued meaningful outperformance. This group is growing through this time. In fact, what you've seen is multiple compression over the last few months because you've had such massive outperformance by these companies that they're actually no longer trading at their multiple highs. They're trading at value levels near their peaks, but it's because the businesses are doing so dang well that the multiples have actually pulled back in this time period.
And Byron, it's Josh. A quick question on the basket. So a lot of investors, obviously they're going to be familiar and they'll understand why you included Twilio or Shopify, but they might also wonder why not include other names, Byron, the Zooms, ServiceNow, Snowflake. How did you narrow down the basket?
Yes. So the beautiful thing about the industry is there's probably 24 great names that you could consider owning right now out of the 54 pure play public cloud stocks. Specifically, there have been some that have had this outperformance due to the COVID push. You mentioned, Zoom, Snowflake, the biggest IPO of the year that's still in lockup and probably has some settling to do. You could add Alibaba to that on an international list or a number of domestic entities. What we were looking for is those that have had steady performance and massive TAMs ahead. And you look at this group, the Mount SaaS group, they're up 30x in the last decade, over the last 10-year period. And yet you look at each of their TAMs, it's a mix of applications and infrastructure. It's a mix of the hyper-growth new challengers and the slower growth incumbents that are still growing well into the double digits and throwing off meaningful free cash flow. We think this is the best of the best. And if you're going to pick some names out of the group, this is a very representative basket of the overall ecosystem, but also the steady outperformers who haven't enjoyed a natural axe from the COVID tailwinds and will likely be pretty stable going into the years ahead.
Shepard Smith here. Thanks for watching CNBC on YouTube.